Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is at current 4:47 in the a.m. Eastern Standard Time, December the 4th, 2018. What we're going to talk about this morning is something that has not happened since 2007, and that is the inversion of one of the yield curves. We'll talk about what that means for the markets. We'll also talk about my preferred yield curve. We'll review that chart. We'll see how we opened up the month of December and where we are in terms of a flattening yield curve and how close we are to inversion. Then we're going to segue over into the pre-market activity, and then we'll leave off with members' stock chart requests, which is where I review the symbols that our members submit for me to review, as well as a couple of watch stocks. So let's get to it. Yesterday, it was announced on Bloomberg and ZeroHedge.com that the U.S. yield curve had inverted for the first time since 2007. Now, the yield curve that inverted was the spread between the 3 and 5 year Treasury bonds. What does this all mean? For those not familiar with what the yield curve is, in essence, bond traders are worried about the risk of time. They do not want to invest further out in the yield curve out of fear that there may be economic distress ahead. And in this case here, the 3 years versus the 5 years are now paying more than the 5 years. Think about that. And this morning, here are the yields on the 2 year. The yield being 2.815 versus the 5 year, which is only paying 2.807. Now let's put this all together. What you're looking at here is a chart of the 2 year Treasury bond versus the 10 year Treasury bond. This is a monthly chart. And I'm going to drill down a bit further here in a moment. So bear with me. I know this is a noisy chart, but I want to put this all together. A flattening yield curve means in and of itself not all that much. It's just normally a heads up that, you know what, there's something wrong out there. It's when yield curves invert, meaning shorter duration yields are higher than longer duration yields. That usually is a sign of recession. And on this chart here, going back to 1999, an inverted yield curve has predicted every single recession since the early 1990s. And when you take a look at where we opened up here in December, we gapped down. We were in a trading range, and then in November, we broke down below the lower band of this triangle formation. And this month, we have gapped down. Let's drill down further to illustrate. And here you have it. So while we have not yet inverted on the 2s versus 10s, we are certainly well on our way in the month of December. So when we hear the bullish chatter coming out of the Federal Reserve, I think that is just what it is, chatter with no real substance behind it. And that is why you're seeing this morning the US dollar weak, gold rallying. I'm going to go to those charts in a moment. In fact, we're done here. Let's go to the pre-market activity. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this: I am going to be raffling off a 1 year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. All right, so let's open this up with the chart of the US dollar. I spoke with members last night on Market Wrap, which is posted in the members area, that the dollar yesterday flashed a bullish key reversal on the day. And honestly, that made me a bit nervous that we were able to do so. But when I was taking a look at the indicators, the RSI, the ultimate oscillator, on a daily basis, I pointed out that there were bearish divergences setting up, and that all may not be well with the US dollar. Fast forward to this morning, 4-hour chart. These will all be 4-hour charts. We have broken down below the lower band of support, and we are cratering right now. RSI, lower highs, lower lows. So when we take a look at the dollar, which is cratering, we want to take a look at commodities, and in particular, precious metals. And gold is on a tear this morning, up over a half percentage point at 1,246.30 the ounce. Now, we are long of the gold miners. We are long of silver. Let's bring up silver. Before I leave this chart, I want to warn for those out there listening and saying, wow, I got to go buy some gold. Beware. We're trading above the third standard deviation Bollinger Band. That is a warning signal that we're getting a little bit frothy here on an intraday basis. I warned about this yesterday morning on Swing Trading Today when we had the stock market futures, the NASDAQ, S&P 500, trading the same above the third standard deviation Bollinger Band. They did pull back yesterday, and they're falling today. So while I'm not expecting a bearish day on the day, I'm expecting a pause that refreshes on gold. Let's get to silver. All right, silver, 4-hour chart. We have new daily highs. We have new weekly highs. I think that spot silver is heading up here to 1490. RSI is doing exactly what you want it to do, higher lows, and we have higher highs. So silver on a tear, looking good. You can see that we're beginning this new 5-hour bar, which just opened up at 5 a.m. Eastern Standard Time, pulling back a bit. So again, we may get a pause that refreshes here on gold and silver, but net, I think that we are moving higher. We are breaking out. So members, we plan on remaining long of our precious metal positions. We also plan on adding in an orderly basis on pullbacks. Oil is up this morning, nearly 2.5%. So the pullback in the dollar is helping oil. We are not as extended here on oil as we are with precious metals. Now we have broken through price target number 1, which is at 53.31. We are now on our way up to the 55.45, which is price target number 2 on light sweet crude. Let's take a look at the stock market futures. The S&P 500 up first. We are down this morning, and we're weakening up here a bit in this new 4-hour bar, which only opened up a few moments ago. We're down a little over a half percentage point. What we're looking for here is a defense of this support level, what should be a support level, and a filling of yesterday's gap. Now, we did book profits in our long trade of the Russell 2000, and we also booked profits yesterday in Canada Goose Holdings. And Canada Goose yesterday, what happened here is that on an hourly bar, we did not put in a new daily high as we pulled back off the highs. And in fact, we broke down below a lower band of support. Now, this is an hourly chart. I'm not saying that Canada Goose is going to fall apart here, but we did break down below the lower band of support. Now what we're looking for on Canada Goose is a continuation move higher. If we get that move higher up and through this resistance level here, then we'll look to reopen the trade. But not until then. I did not like the fact that we were rejected at this resistance level. So members, more to come on Canada Goose. And the same thing holds true for the TNA. We have lower highs here, and we are now within a triangle formation. So the stress is off of us. We booked our profits. All we're going to do now is sit in cash and look for either A, a retest of the lower band of support, B, a breakout above the upper band of resistance. RSI is making lower highs. So let's be careful here this morning, folks. We're seeing a pullback in the major averages. That doesn't mean that a Santa Claus rally can't occur. History tells us that in all probability, we are going to get one. Back to the 4-hour chart, TNA. So all we're going to do here is sit, watch, and wait. We'll wait for support levels to get retested. We'll look to reopen our long position on the TNA unless, of course, we begin to break down below key support levels. Then it's time to really hunker down and to display patience and allow these trade setups to come to you. And that's one of the most difficult things to do. Don't go over trading your account. Now let's segue over and into our Gold members stock chart request. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below. Okay, folks, now let's segue into our gold members stock chart request. This is where we review the symbols that our gold members submit for me to review, as well as a couple of watch stocks. Let's kick things off with UAA, Under Armour. They must have changed their symbol. It used to be UA. Weekly chart. Now, what stands out at me most right now on Under Armour is really two things. One is that we've built a heck of a base here. It's a beautiful inverted head and shoulders setup. Left shoulder, head, right shoulder, neckline at 24.69. What was the high of the day on Monday? 23.99. So we're just shy of it. So we attempted to break out on Monday. It failed. It was rebuffed. We'll go to the daily chart in a moment, but take note of RSI. It has broken out. We are putting in higher lows and higher highs. Same deal here on the stochastics. The 50-period moving average, which is rising, which is a good thing because now you're going to have a rising floor on the share price, which will act as a natural support level. Let's go to a daily chart. All right, so on a daily basis, we're a bit extended here in that we've had a nice rally since this gap higher on the 30th of October. We've been consolidating nicely, but you can see that as we've been breaking out of this resistance level here, this triangle formation, that we're doing so with not a lot of conviction. What do I mean by that? What I mean is that, yes, we broke out here on the 28th of November. We retested the breakout point on the 29th. That's good stuff. We reversed off the lows of the day. We closed well. We did close off the highs of the day as we did on the 28th, but on the 30th, and then more concerning on the 3rd of December, we have really begun to put in topping tails. And what that implies is that you have sellers moving in and selling strength, especially up and into resistance last seen back here, back in June of 2018. So would I be a buyer of these shares right now? No. Not until we closed above this resistance level, and we did so on volume, and that resistance level is at 22.68. We're just shy of it. It could happen today. So Under Armour looking good from a weekly perspective. On a daily perspective, it's a little bit extended here. Volume has been pretty good to the upside. So Under Armour, I like it. I just don't think that the risk reward is in your favor right now. Now, if we close above 22.68, we can put a stop loss right below the support level. So in that case, we would have minimal downside risk with a lot of upside potential because, back to the weekly chart, the next resistance level after we clear the June highs is up here at around $29.50 per share. So very little downside risk with a lot of upside potential. So it's a good trade, assuming that we get a breakout. The next chart up, AMD. This is a daily chart. AMD pulled back with the market and the semis. We shorted the semis. AMD came along with it. It bottomed out in November, early November, rallied up to 22.22, pulled back, put in a higher low. Nice stuff. That set the stage for a breakout, which it did back here on the 27th. We consolidated for a few days. Then on Monday, we broke out. The problem is that you have the 50-day moving average, which is beginning to flatten out, but it's going to act as a natural resistance level. So what I'd like to see here is a pullback and a filling of this gap, or even better, ideally, a pullback and a retest of this breakout point. Then I would entertain putting on a long trade, but I would not go buying right now into this 50-day moving average. Don't get me wrong. They could squeeze the shorts another day, close it above the 50-day moving average. The question is, can it stay there? And don't forget, you have also a lot of resistance up here. Buyers from back here, here, they want their money back. They're not looking to make a profit. They just want to get made whole. And they will sell the minute that this red entry on their trading platform turns green. So I see no rush here. RSI is looking very good, as are the Stokes, but I think we're going to get a pullback. Patience will be rewarded. And believe me, I was not born with patience. It was a learned behavior. NVDA, weekly chart. We gapped up yesterday. Now what I'm going to look for on this weekly chart is, where do we have resistance above? We closed above resistance last seen back during the week of the 25th of September. The next resistance level I see is at 180, is at the 173.80 level. We were above it on Monday, but we couldn't hold that ground. It was resistance back here in August of 17. Then it became support in September of 17. Now it's resistance yet again. The Stokes are beginning to hook back up. It doesn't matter what they're doing right now until we get a new higher high. We're not there yet. Daily chart. Now on a daily basis, we gapped higher on Monday. We'll probably move higher yet again up and into this declining 20-period moving average, which is going to act as a natural declining resistance level. I would allow for a pullback here before I got involved with this trade. We are seeing a breakout on RSI, which is good stuff. Stokes is still down below the 50 level. We have yet to put in higher highs, but they are moving up higher, which is good stuff. But price and volume action matter most. Volume was good, but when you take a look at this price action, this lacks conviction. You had sellers moving in, taking it off the highs of the day on Monday. So I would not be a buyer yet. We'll revisit it, but I would not buy these shares quite yet. AMRN, AMRN Corp. I want to spend a couple of minutes on the weekly chart, because what I find interesting here is a few things. One, let's acknowledge Stokes are flattening out. RSI implying the same. Now, we had a huge gap up back here the week of September the 24th. We pressed higher. This has all the markings of a short squeeze. And we have been consolidating between, let's call it $16 per share and $20 per share for several weeks now. Now, what stands out at me first is that we put in a new weekly low so far this week. That's not good. Now, what I would like here is one of two things, or both, and you can have both. If we got a pullback to $16 per share, I would look to scratch the itch, meaning I would look to open up a small position. Then as we began to rally and we broke out and above this upper band of resistance in dotted blue, that would validate that my initial purchase was accurate and that I would be okay to begin buying more on strength. In short, I want to buy high and sell higher. And then once we get through 23.33, which is not an all-time high, but it would certainly clear the way for a continuation breakout, because one thing that this stock has going for it is a massive consolidation and the makings of a major league breakout. And the only way you'll appreciate it, though, is if you take a look at a monthly or a quarterly chart. Let's bring up a quarterly chart for giggles. And this is really a high-level view of the battlefield. To identify where a stock may go long-term, you'll want to identify where it's been, where the resistance levels are, and answer the major question. And that is this: are we putting in higher lows and higher highs if you want to get long? And the answer here is very clear. So what we have is a beautiful W formation. We have higher lows, and now the stage is getting set to break out to new multi-year highs. The pivot point of this W formation goes all the way back to April of 2011. Think about the consolidation that's taken place here. Now, what I will point out is that we are extended relative to the third standard deviation Bollinger Band. We were last quarter. We are still this quarter. But I'll tell you, when we break out and close above 18.87, this stock is going to go on a tear. Beautiful volume. Absolutely gorgeous volume. This is a stock to watch, no doubt about it. Shopify, daily chart. We spoke about Shopify over the weekend on best stock charts, and then again on the week ahead commentary with members, which I posted in the members area on Sunday. Now, Shopify has a really pretty weekly chart. It hasn't broken out yet, but let's go back to it for a moment, revisit it. What we have here on Shopify is a breakout on both RSI and the stochastics. Price hasn't followed through yet, but we are close, very, very close, daily chart. So on Monday, we closed above resistance at 155. So we are very close to flashing a buy signal on Shopify. So members, stay tuned for an alert. This is a doji star formation, a sign of indecision. Volume was a bit light on Monday. We want to see this volume rise. But net, Shopify is looking very, very good. NIO, I spoke about this one on Swing Trading Today on Monday morning. I'll link to it at the end of this video. Now, I discussed the pattern that was setting up here, and that was a bull flag setup. I also mentioned that Friday was a bearish reversal day, which was not good. And on Monday, we attempted to break out of this bull flag setup. It failed. It reversed, and it closed down below the lower band of support. If we make another continuation move lower today, you'll want to avoid these shares. However, if we pop higher and recapture this lower band of support, well, then you may be able to put on a small trade to the long side with a stop right below the lows of Monday, and then add more as we begin to break out above these resistance levels. Volume rolled in higher on Monday. That's not good, to the downside. So NIO, warning flag is on the track for NIO. This is not good price action on Monday. Very bearish. FEYE, this is another one I spoke about over the weekend. Weekly chart. We are breaking out on Stokes. We have a beautiful W formation forming. We have broken out this week. The question is, do we hold it? I discussed the daily chart with members on Market Wrap last night. So members, go check out Market Wrap. I discussed this in greater detail. Our strategy for today. The last chart up is Northern Dynasty Minerals, NAK. So it had a very weak day on Monday. You could see that we are putting in lower highs on RSI and lower lows. That's a problem, a major league problem. Also, lower highs, lower lows on Stokes. Add to the lower highs and lower lows on Stokes, the fact that we couldn't even get above 80. We were rejected below 80. That is not a good sign. So we broke down below the lower band of support of this triangle formation on Monday. We did hold this support level at, let's call it 72 cents. If we make another daily low or we close down below the 72 cent mark, I would avoid these shares like the plague. Volume rose on Monday. We have lower highs, lower lows, and ultimate oscillator. I have my concerns about this stock, and it's not just the daily chart. What really concerns me is more the weekly chart, and it's probably what's influencing the daily chart as well. Let's go through it. Weekly chart, NAK. Here's the problem, is that we broke out. We had a little W formation going on here. We broke out above 68 cents per share, consolidated, then we moved higher. The one problem that longs have here is the fact that you have the 50-period moving average on a weekly basis acting as a declining ceiling. So it's going to take time for these shares to consolidate, move sideways. Hopefully for those longs out there, it doesn't break down. Hopefully just consolidate sideways until the sellers are gone and you have more buyers and you do sellers. You get the 50-period moving average, which flattens out, and then we'll have another run at it. It's at that point in time where we'll probably clear that resistance level. But for now, be aware of the higher level view of what's going on a weekly basis, not just an intraday basis or on a daily basis. Pull back, show some patience, be really deliberate with your analysis of trades that you're looking to put on. And that is it for this morning, folks. Everybody have a profitable trading day. Subscribe to my YouTube channel. Enter your email at anywhere on the website. We'll send you out some free trade tutorials. And have a great day.